All right. Good afternoon, everyone. Rich Swerbinski with the Mortgage Collaborative here once again with the Last Week in Mortgage Today, our weekly whirlwind through all the latest and greatest in the mortgage and real estate finance industry. And as I am every week, pleased to be joined by some rotating co-hosts as some of the best and brightest in our network nationally. This week, really pleased to be joined by two network favorites. First off, our good friend from Total Expert, Sue Woodard. Sue, what are you at the Louvre there or something?
Yes, I'm at actually at the Bellagio, which is
Oh.
almost like being at the Louvre. And so, yeah, it's pretty fancy here, but it's very interesting here at Tech. It's pretty good attendance, and we can talk a little bit about that as we get going.
Awesome. Yeah, that's right. You're an MBA Tech. Very curious to get your take on the vibe there and with the chatter in the hallway, the best way to learn what's really going on in the mortgage industry,
Absolutely.
right? So,
exactly.
Awesome. And our good friend, the Senior Vice President of Operations for People's Mortgage Corp, Katie Klauss. Katie, great to see you.
Hi, good to see you.
Have the autograph request died down after your smash hit performance in our debate session at TMC Miami?
I was going to say I've been meeting with a campaign manager, so I'll be ready next time. I'll be
I was a little nervous
ready.
because that morning of the session, a couple people came up to me and said, "Hey, I was out really late with Katie Klauss last night." I'm like, "Oh man, a huge
and early on a boat. It was rough. Yeah, I made it though. That was my priority, the debate.
Well, you came out and killed it, and we've gotten a lot of positive comments about that session. And
it was a lot of fun.
For sure.
A debate session at every TMC conference going forward now. So
yeah,
good stuff. Well, Sue, thank you again for joining us. Our good friends at Total Expert, longtime partners, marketing operating system that so many of our members are happy clients of, and you've imparted so much wisdom on the TMC familia over the years, and I'd love to get a little bit more of that wisdom. MBA Tech, what's going on at Tech? What's the vibe in the hallways? And
it's cool. Yeah, I'll give you just a couple little nuggets. It's just getting started. You know, we had an opening reception last night, but the sessions are just getting started today, but pretty well attended. You know, I mean, it's definitely a lot of vendor partners here, but there's some great executives and lenders here. And, you know, some of the themes that we're already hearing, there was a kind of a C-level opening session this morning, was talking, you know, of course, about what kind of innovation are we going to do right now with the market shifting? You know, everybody's looking at their technology stacks, and kind of the recurring themes that you're hearing is people really taking a good hard look at those tech stacks and saying, you know, how do we know that we're getting return out of this? But what I appreciated, they talked a bit about not trying to necessarily get a dollar number in ROI. You know, I mean, one of the comments made was that, you know, we have all kinds of investments that they're building our customer base, period. And so we know that there's going to be ROI. We can't necessarily look at it and say, okay, it's X dollars per X that we're doing. But his point really was talking about that if you don't have customers, you don't have business, and kind of your expenses don't matter at that point. So some interesting things being talked about there. People are talking about scalability. I think I would say just two real quick big themes that I'm hearing people talk a lot about, not just at this conference, but I heard it come up at TMC as well, is really looking at how do we continue to automate. And it's not about removing the human from it, but empowering the human to do what the human does best. But how can we take some of these mundane things that people are still doing? There was a comment made that we kind of removed the paper from the process, but we didn't remove the kind of the paperwork, so to speak. Now it's just being done, kind of digitally or with people. It's not paper, but we still haven't really made the process easier, I would say. So that's been a real big theme here. And then it's just about adoption is the other huge thing that we hear lenders talk about all the time, is how do we make sure that we're ensuring that we are adopting and using the best practices. And certainly at Total Expert, that's a topic that comes up a lot, that has been heavily invested in. And I encourage lenders, so people that are listening, don't throw out a technology solution just because you're looking at it saying, hey, our adoption hasn't been high or engagement hasn't been high over the last 2 years. People were standing in a money machine for the last 2 years. Now is the time to really double down with those vendor partners and say, hey, how can we really get, how do we get hands-on? How do we get more out of the investment that we've made in you? So it'll be some more interesting topics to be sure, but those are the headlines that we heard this morning.
Good stuff. A lot of good stuff there. And Katie, before we get into the news, a big topic that is just a recurring one, just hearing our members talk, is what Sue touched on, and just tech in general, like ROI in tech and adoption of tech, and run mortgage operations for a very large independent mortgage bank. It does business all over. Would just love to get your perspective on that before we get into the news headlines and kind of what Sue talked about there.
Yeah, I mean, we use Total Expert, and I think we just signed something to kind of use different features, to her point, that we didn't have time to implement before. Now people are looking for edges to get ahead. And so we're going to, pick up some of their newer technology and see what we can do with it. It's also a good time to implement and tweak the things that you have in place, because again, you have the time to do that. So what do you have, and what are some of the things that you're not using that you could be using, or how do you apply it, within your LOS, or how can you have, your systems talk to each other to make it easier? It is a funny point though. You're right. Like, you don't get rid of what you have to do. It's just now all being done, electronically, but some of it is automated. So it's not such a manual process, but yeah, we're looking at things that we can just, implement because we have the time to do so, but they're also very aware of costs. And so I do think it's going to be hard to get your upper managers, owners, president, like people to, some of these things we've looked at, the cost has really put the brakes on, and I don't think it necessarily should, but you do have to have some kind of ROI to move forward with it.
Absolutely.
So,
right on.
You got to pick the right partners though. I mean, we have a great tech stack, so it is important to get ahead, especially today.
I will tell you that the question was asked from the stage, how many of you in the room absolutely love your tech stack and it's working great for you? 0 hands went up, right?
Wow.
And then it was, then it was like, how many of you are somewhat satisfied with your tech stack? And then there was like some hands, but obviously and that's the great responsibility on the vendor partner side is, consistently upping the game to be able to serve the industry.
Right. Yeah.
It's weird. The tech is still evolving in a lot of cases, some areas more than others. And then, like you guys said, the last 2 years have been so busy that it's been tough to adopt anything new. So you got lenders right now really taking a look at their business model, their tech partners, and interesting time for the industry, and an interesting time for America and the American economy in general. Getting into the news here. Big report this morning. A lot of people were waiting on the latest inflation data. A consumer price index data got released this morning at 8:30 a.m. Eastern. The markets were really expecting a horrifically bad number here. Biden administration went out yesterday to kind of like prep the markets, like it's going to be bad tomorrow. Typically when the presidential administration is doing that, I know overnight futures of stocks were just getting pummeled, but we got the actual report this morning, and the headlines that most of you saw was inflation up 8.5% year over year. But you look a little deeper inside the number, and you look at the month-to-month data, February to March, it overall up 1.2%, which matched expectations. But then the probably more looked at core CPI number, which you strip out very volatile energy and food data. It was only a 0.3% amidst expectations of a 0.6% increase. So we actually saw stocks and bonds rallying this morning off inflation data that showed inflation was up 8.5% year over year. Sign of the times in America. But we got a little rate relief this morning. I mean, it's, the rate situation in general. So you guys are a marketing operating system. So a lot of what you do is fueling off interest rates. Our industry fuels off interest rates to a large degree. And right now, interest rates are fueling off what's going on with inflation. It's just kind of a roller coaster right now. But there were some signs of optimism this morning that things could be slowing down a little bit, God willing, because I'm just sick of hearing and reading about inflation. It's been a year of this.
Well, it goes to show you, by the way, that the psychology of the markets, right, is that, people, it's fascinating to me. I mean, I've been a student of the markets for a very long time, and I just find it fascinating, to your very good point, when expectations are this and it turns into something a little bit different. There's like elation that it's like, it's terrible, but it's not as terrible as we thought. And, and the fact that people get, very quickly it's not like anybody's used to these gas prices, but it's not the same like shock effect that it was. Right now it's kind of like, well, it just goes to show you, people kind of get used to what is, for better or for worse. But it is interesting, I mean, obviously the rate climate, we're, as you said, a very rate sensitive business, and that's driving all of the change. But I don't know, Katie, how are you all like looking at this with some of the changes in interest rates?
Yeah, I mean, first of all, when it says like the highest inflation since 1981, like I never want to hear about anything that happened before I was even on the earth, because it's scary. And then it referenced like a 20% 20% interest rate in the 80s or whatever to combat this. And it's like, hearing that is very, very scary. But yeah, I mean, rates still aren't that bad. It's just people are so used to the lower rates. My bigger concern, just because I'm not in sales, and my bigger concern has always been, and it's been for the last few years, is how inflation doesn't even just affect rates, but inflation and the cost of goods affects our low to moderate income borrowers. And so if they can't save money because they're paying these higher prices elsewhere, it doesn't just affect them in the rate of their mortgage, it also affects in their ability to have a down payment. And so it's kind of a double whammy. And the fact that, rates are going up and down, but they are higher than they've ever been. So people are pulling back because they want a 2% interest rate that they're never going to see again, or not possibly for a very long time. And then they also can't save as much money to buy a house. So it's been a rough couple of months, and it's going to be scary, going into the rest of the year, because they're going to be, raising rates, they're saying, several more times this year and into 2023. And so what does that do for our borrowers and for our low to moderate income borrowers, especially?
It's a great point. Very challenging general climate right now. First-time home buyers and median to below median income earners just trying to buy a home in America right now. A lot of impediments to it. And yeah, to your point, Kitty, it's not just the interest rate and the price of the house, if you can find one. It's the fact that I DoorDash Chick-fil-A last night, it was $110 for my kids and like 4 or 5 people. Like, what the hell is going on here? It's really crazy. So speaking of crazy, some other news that broke just today, CFPB, much more aggressive CFPB, certainly in these last 6 months, announced that they're filing a lawsuit against Transunion. Some really aggressive rhetoric in the press release that they released announcing the lawsuit, which not always typical there. Just, going out of their way to just sling some arrows for sure at Transunion for what they view as unlawful practices in order to generate profits. In a nutshell, everybody's entitled to a free credit report per year at freecreditreport.com. You go there, those come through Transunion. CFPB alleging the Transunion with some deceptive practices to lure those free credit report people into products, and then it was tough to get out of them. But Katie, I'll go back to you on this one, just again, as the head of ops for a large independent mortgage bank. You're waking up at night with Rohit Chopra nightmares yet?
Yeah, I mean, definitely. I have been. And this, I feel, is the director's really this is gonna be the big thing that they're gonna come out with and go after Transunion. Like we were talking before the call about just like the language in here, and it's, like reprimanding a child, and, just the language about the digital dark patterns and, UDAP, and it's very Star Warsy. But I mean, if what they're saying in the order is true, that's a big deal. You can't just totally ignore the CFPB. One of the interesting things too is it was like 17, I think, is when they got that executive order, and they were kind of working through it during the other CFPB, where, they weren't really using enforcement, and they kind of weren't really doing anything under the Trump administration. And so now, I don't know if they thought it was okay to continue doing it, but it certainly isn't. And I think they're going to make an example out of Transunion, unfortunately. And so we're going to go back to they're going to do it through enforcement instead of through learning. And I was in compliance during those timeframes, and it is not a fun place to be, because most people, like we, want to do things, we want to be compliant. We care about the consumer. And so it's unfortunate that if what they're alleging Transunion had done, which is just totally ignore their previous enforcement action, that is a big deal, but that's not how the rest of us want to do it. And we would like to work with an agency that works with us as opposed to just brings down the hammer anytime they find something that and UDAP's a very arbitrary thing anyways. It's, open to interpretation what they find to be deceptive. And so if we're going to go back to that, I am going to wake up in the middle of the night sweating because you never know if you're going to be the next one. So you're hoping to do things right. And that's all you can do is do your best. And, I feel for TransUnion right now.
Yeah. You know what? I wish the CFPB would go after like cable companies, or cell phone companies. Like when I think about like what really impacts like your common person out there, it's like, I feel like I've been so ripped off by either cable companies or my cell phone companies, but yet there's these other things that they're going after that I honestly wonder how many people were so adversely impacted by this versus the extra, like, I don't even know, thousands of dollars we pay on that other stuff. I mean, shouldn't that be under their purvey? But to your point, they love to make somebody a poster child in the worst possible ways.
I do think they said they had it was like 150,000 complaints. So it was a substantial amount of people who complained about it. But yes. Yeah.
As much as I like to poke fun at Mr. Chopra, I say all the time, like, running an organization of small to medium-sized mortgage lenders, mostly, like, we need a strong CFPB. We really do. And especially with another report that came out this morning, top 50 lenders in America gained market share. They did, I don't know, it was like 77% of the loans in 2020, 82% last year. So, it's more important than ever to protect people, to your point, Katie and Sue, that do it right. It just seems like the CFPB pendulum, it can never stay in the middle. Like, I think a lot of the things that under Trump, the CFPB was just a shadow organization that was there. I don't even know what they were doing, to be honest with you. And now you have somebody in there that's really looking out for the consumer, but they're going after pretty aggressively. Made some statements last week about going after the big bank operating system providers. And again, the rhetoric, as Katie mentioned in this morning's press release on the lawsuit, was pretty strong. So, but Sue, another thing that the change in the compliance climate that has caused our members to start talking about it. People think compliance, it's okay, it's fair lending, it's fraud, it's operational stuff that Katie's losing sleep over, but it's also on the marketing side as well. Mm-hmm. And the way you're marketing to customers, things you're saying, things you can't say, how you're marketing to people. Totally. And I know that Total Expert, that's one of the reasons you guys have really gained a lot of adoption within our network, is it manages the compliance of all your marketing efforts for you.
Yeah, absolutely. And I think that is one of the biggest things. And it's interesting when you think about the fact that they haven't cracked down as much. You haven't seen as much of that on some of the marketing things, but I think, there's some good signals that's coming, and it should. You shouldn't have these these rules out there that truly are there to protect the customer and not actually be actioning on them and enforcing on them. And so yeah, that's one of the huge selling points of Total Expert right from the start. We worked with Mitch Keider at Wiener Brodsky, who I think most people know. Great compliance attorney, and really we're able to put things together in a way where it literally does make all of the your marketing actions. We're not going to tell you what compliance is, but we're delivering a system that actually makes it possible to be compliant. And especially with the co-branded marketing, as people are getting back into having the time to be working with those real estate agents, digging back into being really good partners with the real estate agents out there. I mean, now is the time to really make sure you're delivering all that value, but you've got to do it compliantly. And Total Expert is set up to do that perfectly, and it's a huge competitive advantage.
You got a lot of LOs out there that, some brand new fancy cars from the last couple of years, they got to make those payments on. So this is the really dangerous sales compliance type of climate right now.
Well, and people don't know, right? I mean, and Katie, I'd love to hear your thoughts on this, but I mean, I think there literally this was a market over the last couple of years. There's people that got in, or they're sloppy and nobody's looking at things. It's like, things are going to tighten up. So I don't know.
Yeah.
Katie.
And I was just going to make the point of a lot of the tech companies that are getting into the mortgage space don't understand mortgages, and they don't understand compliance. And I've had countless conversations with companies where I'm like, you have to understand, like, I need X, Y, and Z, because if I don't do that, a regulator comes in here and puts the hammer down, you have to figure out how to support that for me. And so tech companies that understand the actual mortgage space, that's a big advantage in my mind, because some of them, they want to be tech companies. And it's like, well, you still have to be able to work within the industry that you're selling your product. And mortgage is a highly regulated industry, and they have to understand compliance in order, to be a good partnership. And Total Expert does. And marketing is a huge thing that people look at. And it's also very easy because our Arizona regulator just will Google our loan officers' names and go through their marketing and their social media like that. That's part of their audit. And so it's not just on us, it's on the loan officers as well. And marketing is a big part of that.
That's right.
Yeah.
This is the last week in mortgage today. I'm Rich Swerbinsky with the Mortgage Collaborative. This week, joined by our good friend Sue Woodard from Total Expert, Katie Klauss from People's Mortgage Corp. Some other good news. There's been a lot of bad news, really. I hate to say it on this show and the other ones we do. It's been a weird climate the last 6 months, but some signs of optimism. The inflation report this morning being not as bad as most feared. Then we also got some data over the course of the last week, just related to hopefully a better inventory situation as we get into the real heart of spring buying season in the summer. Redfin reported that 12% of homes listed in the most recent week they tracked had a price drop. It's a good sign. That's up like 4% from the week prior. Also, Realtor.com, always got to take this a little bit with a grain of salt because it could be somewhat self-serving, but released the results of a survey that basically said 67% of what they classify as prospective home sellers were planning to list their homes by the end of summer. And there have been some other reports as well that seem to indicate that prices could be coming down a hair, or at least stopping the ascent, and that you could see some more homes put on the market. We're kind of working with a low bar right now, Sue, but it seems like there's some optimism brewing that some of these things that have kind of been ailing the mortgage market could be getting better, and on the purchase side particularly.
I agree. I mean, just a couple of thoughts on that is that I think I wouldn't say that prices are dropping, but I think people are getting crazy. Also, they're like, I'm going to list my house for like $1 trillion more than I bought it for a year ago and see what happens. I mean, and I think there is kind of some normalization of people being like, okay, rates are going up, like we need to actually, if we want our house to sell, we need to, So I'm not surprised to see a little bit of the decline in what people were offering things for, but I do hope, as you said, the inventory situation has been huge. I would recommend for the lenders listening that this is a very big cue to reach out to your past database early and often, because if they're starting to think about it, they call a realtor first. If it's not your realtor, that somebody in your database could be walking out the door based on a different recommendation that realtor would make. So I think it's a really, really important time to stay very close to that past customer database, your servicing book as well. There could be people in there, but it's a really important time to make sure that you're being very proactive and talking to them about, if you're thinking about selling, hey, get in touch, let's work through this. I can make a recommendation for you. Because I think on our side, we don't necessarily want them to get to the realtor first.
Katie, you're our official correspondent from what we like to joke is the epicenter of the potential housing bubble out in the Phoenix Scottsdale area. Have you guys seen any, price relief? I think the last time you were on, I told you my mom was looking at buying a house out there, and she flew out there for like 3 or 4 days and just came back home and said like, yeah, there's no way. It's insane. So
yeah, it definitely depends on where you're looking and what your price point is. I think the luxury market is still pretty crazy in Scottsdale. I heard a story from a friend whose parents, went in way over offer and they got outbid by a ridiculous amount. But it depends. So some areas I think you are seeing a loosening up, or, if there's some inventory opening up. In Scottsdale, there's really nowhere to move to, and most people don't want to leave the area. So those kinds of areas, the market is still out of control. And even if it's come down, it's so minor that it really doesn't make that big of a difference.
One of the good things about like interest rates and home values just exploding like through the roof. It's all anybody could talk about. It's on the front page of any business news website. The byproduct of that is if we do get a little relief and we end up back at 4.25, 30-year fixed, and home values stop rising, I feel like there's so much demand out there, Sue, from people that want to buy houses that for a bunch of reasons they can't. And if we could get a little relief, which I think is very realistic based on some things that are starting to happen in the economy, it could lead to a big surge in purchase activity.
I totally agree with you. I mean, there's certainly a lot of pent up demand. And, one of the more fascinating sessions I thought at TMC was listening to the president of the National Association of Home Builders, where he was talking about, some of the challenges with new construction and some of the things that were, causing some of the glut from his standpoint. But I completely agree with you. I think as we start to see not depreciation, but a deceleration of the appreciation rates that we're seeing, there's also a lot of people who are wanting to get their money out of the market. I mean, I think because there's been so much, just so much volatility and uncertainty, I think people are feeling like that's why people are, in one of the reasons people are paying over market is they're saying, I want to get my money out of stocks. I want to put it into a real estate asset. People are buying investment properties and second homes at, very high rates. People are making these, crazy cash offers. I mean, that's the thing, Katie, I'd love to hear what's happening, for you all as you're seeing the refinances that are coming. In some cases are just kind of the follow-up to the cash purchase that's been made, right?
Yeah. And we're seeing some of the price hits that they've put in, like it feels impossible to do a second home now because of the, the price hits that Fannie has. I would hope that those would have an impact to slow down the second home and investment buying. I wouldn't want people to take their money out of the market and buy houses because we need them for the first time home buyers, and those investors have been a problem, particularly in the Phoenix metro area, because there are so many like VRBOs or investment properties that if you could get rid of some of those properties, it would free up a lot of inventory for first-time home buyers. And I would love to see that happen. Yeah, and then like affordable housing, like I said, there's just not enough going into that, and new builds because of the backlog of all the construction products, and even those of our clients who are buying new homes with the raising rate market, they were locked in and their house is 3 months behind, and so now their rate lock's expiring, and how do we deal with that? There's been a lot of issues as far as that, although we are coming up with some, this is kind of off topic, but we are trying to come up with a lot of tools for our loan officers to help kind of combat some of that with like an extended rate lock program so that they can shop, or going straight to underwriting, an accelerator program. Like, we're trying to come up with ways to combat the rising rate market and also help some of these people take the time to find homes in the hopes that the values are coming down and they can now afford something, but still have an interest rate locked in case it goes up as high as they're anticipating.
Right. I don't know that we'll see a bubble burst.
No, I don't think there's enough inventory, for a bubble yet.
Yeah, I would totally agree. And, you think about, we've also had better, we've had better underwriting guidelines, and kind of more responsible buyer behavior as well. I mean, I remember those days, where you had the teacher making 30 grand buying the $500,000 property just because it's like, whoa, and we have less mortgages on adjustable rates. I mean, I think the numbers are something like in the early 2000s, 2005, something like 40% of loans were on adjustable rates. Now I think it's like 1%. Like, it's
coming back though. That is one thing that I've seen come back, and that's a little scary, because ARMs are very reminiscent of right before the crash, and we're starting to see them come out. But there is equity in a lot of people's homes, so it's a little bit different. But that is one of the reoccurrences we're seeing, is the ARM loan for sure.
It's a great point. 26 trillion in gross equity right now, which, again, leads you to believe we're not going to have a bubble, but
That's the thing that makes it different this time. There's so much equity in these homes. Even if you had a massive correction, it wouldn't be like, oh wait, people were just walking away from homes they had loans that were $100,000 more than what the value was worth. And so, but, and good point. It's good to see people though doing tactical things, extended rate. Anybody didn't read Rob Krisman's newsletter this morning, the piece on extended rate locks was spot on. It's like, you got to scroll down to the nerdy capital market section that many don't make it to. So I wanted to mention it because it does just a great job explaining the extended rate lock and, both sides of it, like what makes it challenging for lenders and obviously the benefits of it. But Good stuff. Last piece of news I wanted to touch on, Fannie Mae in the news this week. A couple people left, their CEO, their chairman of the board. We've kind of been seeing that, just being under conservatorship for a long time. Price caps and salary caps, other things that go along with that, causing some of their top people to leave. But more notably, they announced that they were going to allow a title insurance alternative on loans, an attorney opinion letter, just talking to some of our members last couple of days, $400 or $500 savings and closing costs for lenders. Katie, going back to your point, just about the challenges of first-time home buyers, every little bit helps, right?
I don't know if waiving title insurance with an opinion letter would be my way to save money, but yes. I mean, I think I was reading about it and this is crazy. The other thing is the limited circumstances where you can allow it. I read their release like 3 or 4 times and don't see what a limited circumstance would be. Like, what is that? What can you qualify under? So I don't know if I missed it. If you guys know, let me know. But I was talking this morning and just from a lender perspective, I don't know who's going to close that without title insurance. And from an attorney perspective, if you're an attorney, you better have a lot of confidence in your title skills to write some kind of letter. Because if you miss anything and it blows up, then who's paying for it? And attorney fees are real high. So I would actually like to see what the cost of title insurance versus having an attorney do all of these title searches, and what if they're billing you by the hour, then what would the actual cost savings be? It's a very interesting thing that I know Radian tried to roll out previously. It didn't work. I know Iowa has like a guarantee, so they have it, but it's, sponsored by the state. So it's a little bit different. It's just not some random attorney who's written an opinion letter of some searches that he did and saying you're good to go. I think it's crazy. From a lender perspective, I think it's totally crazy.
I got to ask you a question, Katie, as a lender. Now, I was on the lending side, but it's been a couple minutes, since those days. But how often do title insurance, how often are claims actually made in somebody's title insurance policy? Because I can say in my years, my 31st year in lending, I've literally never heard of one.
It's very few. So you make a very good point. Like, it's very few and far between, but if anything does come up, or if it did come up, it's just so costly to get anything fixed. If there's any kind of lien on the property that they didn't disclose, or there's any kind of easement or, property dispute, those things are incredibly costly. And so who's paying for that? The attorney's E&O insurance, I guess. I don't know. There's a lot of questions I have. But yeah, you make a good point. My other concern is this is clearly designed, to your point, Rich, for a low to moderate income borrower who wants to save money in closing costs. Those are the properties that are normally distressed, older, been around for a long time, that you find some kind of lien that was on the property in 1967 that pops up when the guy goes to sell it 5 years later. So that it would be another one of my concerns is it's different if you have a clear title on a brand new build that was just surveyed or whatever, but these properties that a lot of the first time home buyers are buying, that's where you pop up all these weird, land related issues that you have to work through in the title insurance before you even close sometimes. So, yeah.
Isn't that one of the cases to be made, Rich? You might know about this, to blockchain.
Absolutely.
Right?
I've been saying it forever. The blockchain technology works absolutely perfect for the real estate finance industry. Now, 5 years, I remember doing a panel at our conference 5 years ago where we had some blockchain experts and said it would be 3 years, and it's been 5 since then. So, but there's a couple of lenders that are starting to get involved in it.
Yeah.
You're going to see the federal government that is going to figure out how to regulate cryptocurrency and the blockchain in general. And then I think you're going to see Fannie and Freddie will start to take crypto related assets in terms of qualification. And then I think you'll probably start to see some momentum once that stuff happens. That stuff will probably take a year, would be my guess, but it does work perfect. It really does. It eliminates really the need for title insurance, and it every single piece and part of the real estate finance transaction is on a secure. It just eliminates a lot of cybersecurity concerns and other things as well. So, but good stuff. Well, Sue, Katie, always enjoy talking through our crazy industry with the two of you. And as usual, both failed to disappoint. So thank you very much, Sue and Katie, for joining us this week.
I did think we were going to cover Will Smith. I mean, you're not even going to talk about it, or was that on a prior?
I still am in disbelief what happened there. On my show with Rob, he said, he hit the right rock. Like if he would have hit the other rock, like the big muscular rock. But I still can't believe that. My teenagers all think Chris Rock is cool now. So I think Chris Rock won the social part of it. So
Yeah.
All staged. All staged. That's why.
Listen, if there was ever an event that needed that kind of notoriety and news, it's the Grammys, because
totally. I think
really
Katie's
is.
spot on. I really do. So
Chris Rock's cool. Will Smith's memoir selling out. All staged.
exactly. I was flying in yesterday, and on Delta, literally, like I could see everybody watching Will Smith movies, and I'm like, this. I totally agree with you.
No publicity is bad publicity, or whatever the saying is.
Exactly. I'm gonna let them know that here at the event. Maybe we can like pull something off, like
there
really
you
spice
go.
it up a notch, and get Julian Hebron, a little something going on. Who knows?
Yeah, you can smack John Hill in front of everybody, and then it'll go viral. Total expert will be all over the news.
Yeah. Well, really quick, Rich. I know we got to sign off, but we could do it right here, like
Get him. Here you go.
Do it right there. Yeah, there it is.
Two of my favorite people, and Rich. How you doing?
Listen, I wouldn't like you either if Michigan had the track record they've had against Ohio State over the years. So.
Have a good day, everybody.
All right, guys. Sue, Katie, thanks as always. To our listeners, thanks as always for taking 30 minutes out of the week with us. We're here every Tuesday at 2 p.m. Eastern with the Last Week in Mortgage Today. Until next week, have a great rest of the week, everyone. Take care.
Bye.